Hey guys, it's Will here. I'm going to go through the markets again. Hopefully you've been checking out my videos over time so that you have a sense of kind of how I look at the markets and the charts. Because if I scroll back here on the NASDAQ, you can see that I drew a line across the tops here. And you can see that we have a new lower high here. And then we bounced at this spot each time. And we're actually below the 200-day moving average as well. And then as we got closer, we had a double bottom, and we started to climb. But as we got to this declining trend line, we bounced down. And then we hit another bottom, again at the same spot, a couple times. Started to go up for the last week, and rejection right at that spot again. So that we were waiting right here for, and there's still, anything can happen, but we were waiting for like a lower high breaking this downtrend. And there was some news that came out, like from the macro right now is kind of important. So that's like Fed, inflation numbers, and there's different theories out there, but up until one of the theories is like the markets were focused on the Fed and the interest rate. And then it's sort of shifted right now then it became any signs of slowdown is good because in the markets, in the economy, because, the Fed would slow down or stop raising rates. But with some bad news in one of the PPI readings, which is one of the inflation readings, basically, it was down. So normally that would be good for the market because they think inflation is going to be going down. But the theory is that now the market's going to be considering earnings and recession. So, and there's still a possibility that with inflation that the Fed would keep raising rates. There's probably still going to be raising rates a little bit, but that's still up in the air. But the focus right now is kind of on the declining economy and which normally would be good for the Fed, for the markets. But so we'll see what happens. But I don't like to get into that too much, but it's good to be aware of it because the charts tell the story. So the NASDAQ, even though we had a cross here and a rising MACD, price percent oscillator, we have this. When I zoom in and when I talk about candlesticks sometimes, candlestick patterns, this is a bearish engulfing candle, quite a big one. It engulfs the previous candle. And then, you want to confirm on the next day. I'm in the pre-market right now. You can see up here. This is TC2000. If you want to get a free trial or $25 off your subscription, check out the link in the description below. I have a link. And this says 6:27 Eastern time. So if I go to like a 10-minute chart, this gray area shows you since the 19th, which is this morning. This is pre-market data. So you could potentially trade if you have access to that in the pre-market. I have a watch list, which is another thing I like with TC2000. There's a lot of tabs here, a lot of data in a small space. All these different tabs are different watch lists. And you can also have scans. So once I have a watch list, I can scan it to get, to find things within that watch list that I'm interested in. And I have all sorts of different scans. Down here is another series of tabs. So essentially, Canadian sector ETFs. Up here I have the markets, my stocks, if any, and then, or ETFs. US sector ETFs. Inverse ETFs, and then I have various scans, I have watch lists because things start to break a downtrend. So like this is cannabis. It's not the biggest downtrend break, but this downtrend here got broken. But then I wait for like, if you don't get in right here, you wait for a pullback and somewhere to get in. There's not much in there. Pulling back in an uptrend. So sometimes, you might be right here and you don't want to jump in because it's too far away. So when you see a pullback, you could wait for it to start to establish another uptrend here. So the pullbacks are kind of potentially good entry points because they give you that stop loss, a pivot point right there. This one might not work out, but when it pulls back, then you have to see if it holds at the 50 or above a previous low. Waiting for pullback. Sometimes things get away from you, but they're starting to form an uptrend. You see the 50-day, the 34 is above this. Eventually, the 50 will get above the 200, but it kind of got away from me. So, or whoever. It's just these are manually created this way because, when I visually see something that's breaking out, but it's not really a spot I'll just quickly. So there's this thing here. It's a plus sign with like a little chart graph thing, a grid, and then you can put it in stock, any watch list that you have. Anyway, let's get back to the market. So I looked at the NASDAQ. It's down 0.82% in the pre-market. S&P 500 did a similar thing. It kind of bounced right now off of that trend line, which is fairly close to the 200. We have a series. We have generally higher lows here. There's a little bit of a reversal here, but at some point, if it supports and heads back up, things could be better established. But IWM was doing a bit better. It did break, but in this case, you've got a horizontal resistance. If I draw that across there, you can see each time it kind of bounced off that point. And then we have the Dow Jones, which was probably the best. You can see that it reached the previous high multiple times. But this high is higher. It got up higher there. This one didn't get quite as high. But it is at the same level as that previous one. So you're never sure exactly which resistance would be reversed on, but but this one, the 50 got above the 200 and the 34. It was above the 50, but now it's below. You can see right there. So anyway, that's kind of the market trend. So based on that, if I was in an area here where we had an uptrend, I would basically, like a break of a downtrend and an uptrend, I would be looking at my US sector ETFs. But when I see this kind of scenario where we're in the other thing before I get into the ETFs or specific stocks, I look at a few other things. So TBF it's not open right now, but it was at a critical spot. So sometimes when you're coming down, you're getting close to a 200, you don't want to make any major moves with your purchases. And here with the 50. And then so when we bounce a little bit at the 200, there was a chance interest rates would start going up. This is the reverse of TLT, which is the bonds. But yesterday it pushed right down and it's below the 200. That's an interesting development because this would mean that the interest rates are going down. So like I said, it's a complex system. Normally in the past, as interest rates went down, that was good for the markets. The US dollar going down is usually good for the markets. But at some point, it's possible that the weakness in the economy and the earnings is going to start to. So what happens is the S&P they're based on an average earnings per share, and if that goes down, then the PE ratio of the stocks would go down. That means that the market is overvalued. So there's some interesting things happening. The other thing I mentioned, U.S. dollar bullish. I mean, it's in a downward trend here. It says it's called bullish. It's not necessarily bullish, but you see how we had a really good run up above the 50. Now we're down below, and we bounced off this 34 here, still heading downward. Short-term interest rates, SJB. We're right at a support spot. And then the VIX is also important. We're having a reversal. We had a big bullish engulfing. See? Whereas this is almost a doji candle, and then this huge, and this engulfed the previous candle pretty much as well. And now we're up, so that's a confirmation as of this morning. So this could be, you had a bullish engulfing here and a bounce, and then it went back down again. So nothing's guaranteed, but this 3 EMA never crossed the 8 EMA here. It didn't get up above. So it's just a one-day thing. I like to see, with reversals, it comes up, comes back down, and back up. So now here we have a higher low, see? So that establishes a trend, the uptrend, and then we had a cross of the MACD. This hasn't crossed, but it's getting close. Even though this crossed here, you never established higher lows at all. So that kind of gives me that. So once I have this sense that things might be heading down, nothing 100% right now. Like here, we pulled back, but we never went reversed. But if we're at this point when you bounce off a resistance, that people can start to go the opposite direction. So instead of using the US sectors, I would go to my inverse ETF tab, and I would start looking at, there's inverses of the markets, PSQ. You can see here, it's good to look at the inverse sometimes, but we haven't crossed the momentum. We haven't got a green volatility stop, but this is an early potential reversal. S&P has a green volatility stop this morning. But, so this looks like, a possible reversal spot. Dow Jones, DOG, this is definitely green volatility stop, but you haven't established higher lows. So it's an early entry. Like here, you had this pullback and then a candle starting to go up. And then if you want to get the IWM, you've got RWM. So that's the main ones. Then you start looking at real estate. So potential reversal here. This is SEF Finance. This was yesterday. It's not today. It's pre-market right now, but green volatility stop. So it's an early entry. And then if you want to get a little bit riskier, you got your Tesla inverse for one stock. You got ARK ETF. Obviously, that's an early entry as well. Because you're still in a downtrend with a red volatility stop, but you did go up. This is a bullish engulfing in an up candle, but it's not necessarily guaranteed or anything, but that is a reversal spot. You could buy the VIX as well. But that's obviously a volatile thing to do. Dollar bearish has been in a uptrend here. We'll see what happens, but it's curling. It's a little bit curling down here. So these are the inverse ones you can look at. There's also leveraged ones. If I click on watch list, I have a personal list I've curated called leveraged ETFs, and this is where it gets highly riskier, 2x or 3x of the market. So you've got the pro short of the NASDAQ. Natural gas, you got energy, that's a 2x bear or bull, whatever, whatever you happen to. Lab D, which is the biotech bear, 3x. So there's, this isn't, I don't know why that's in there. That should not be in there. So I'm going to remove the biotech because it's not a leveraged ETF. Sometimes when I go to add it, I could add it to the wrong. Instead of, I don't know, somehow it got into the leverage one, which is not correct. But I've got a whole list here. Nail, 3x of home builder. There's so many things here. Direction is the company that has a lot of inverse ETFs. So hopefully that helps you guys. I also have scans. I've created one that's got the 34 EMA above the 50 and the 50 above the 200. So those are a little more established uptrends. So you've got the gold miners. You see how when the 34 got above the 50, this started doing really good. But then now we have the 50 crossing the 200. But that's, obviously broke a downtrend, and now we started establishing an uptrend. Gold juniors, gold itself, it's a bit up high extended in my opinion. This one is the larger gold miners. It's in an uptrend and it's sort of pulling back a bit. So that could be if it establishes a little support and starts heading up again, that would be a good entry point. So these are all ones that have the 34 above the 50 and the 50 above the 200. So they're kind of in a good position. Silver as well, obviously. So we have a bit of a pullback here. We'll see if it supports and keeps heading up. Copper is pulling back a bit here. So you can look for entry points. So I would go here and say pulling back in an uptrend. So I see my ones that are in a nice uptrend, 34, and I'm looking for opportunities to get in. Any of these ones you could say this one, biotech broke, but now you're pulling back because it's kind of like a NASDAQ type situation, tech type stuff. Jets was doing better here, bounced here, but it's, this is one where I would be waiting for a pullback. It seems like it might be happening now. So you could put those in your watch list just to kind of check on them, because you don't want to miss an opportunity. Sometimes you're looking around, but you end up missing stuff. So it's good to be, and scans can't find everything. So you have to kind of sometimes manually curate lists, but this was an early one. Price, from my perspective, is price percent crossover. So that's where this is crossing over. So this is where you might want to get in. It's sitting right at the 50 because it crossed over. Another time, like I like when the PPO is above the moving average. So I have one called above the T line and the price percent oscillator. So that means when it's above this T line, the 8 EMA, and it's also above, the PPO is above. And this is, I'll go to the US one. And so that's where we've crossed over and we're above, but it's a bit extended. TLT, same situation. So obviously a crossover earlier would have been good. Now we're reverse bouncing potentially off the 200. But this is actually in a pretty good position. If it pulls back, starts to establish, breaks the 200, it's going to be establishing an uptrend. So that means interest rates would be heading down, essentially. So I'm going to put that in pulling back. I mean, it's just early, one-day pullback, but like this morning, essentially. But I could either say waiting for a pullback or pulling back. It's just that, just to indicate that, it isn't an uptrend and it's starting to pull back. So that's a bit of, sometimes it's not exactly, you might want to get an early jump on that one. But so yeah, that's about it for today. As I mentioned, this is the place where you might be going inverse or shorting. We'll see what happens. There's no guarantees, but there's kind of this squeeze happening where we're in between this area getting squeezed. And so it could break up or it could break down. I'm not committed to any specific story. This could just be a little short-term situation, but there's a lot of fears out there with earnings, like I said, and recession. At the same time, the Fed, when it sees slowing down and that, it's going to not be as aggressive. So there's that battle between the two narratives. So don't forget, you can get TC2000. This is a great program. I use it every day. I love this program. It's got alerts. It can alert me on certain scenarios. All the different watch lists and scans, and it's very powerful. So if you want to get a free trial or $25 off, check out the link in the description below. Thanks to everybody who's picked it up already. Hope you're enjoying it. And we'll talk to you in the next video.